Ladies and gentlemen of the crypto space, we're live on a Friday, August 6th at 11:27 a.m. There's a whole lot of stuff going on. We got the Congress doing whatever they think they're doing, and I think they have mixed intentions, and ultimately everything they're doing reduces to their interest in taxation. Otherwise, I'm going to show you two pages that literally frustrate the crap out of me, and I don't. I mean, I understand that, but you know, you would think if they were that interested in taxation, other markets would have been hit much sooner, other protocols. And these protocols have been around for a decade, even longer than the cryptocurrency space. But those markets have not been taxed. So it's such a subjective thing they do. And ultimately, it's a money grab. And they see an opportunity to uh, claim additional tax revenue, and that's that's what they're trying to do. Not that the additional tax revenue isn't warranted, and then really what we have is ambiguity in how to properly or reasonably tax the space. And let's dig in. I want to compare the crypto space to the markets that probably should have been taxed before the crypto space, or why are certain markets not taxed when the crypto space is being targeted. Um, and ultimately, it all should be taxed. And the question is how it should be taxed. Well, let's talk about this stuff. Regulation and contradiction, risk indicators. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Lisa's in the house. Hi, no. Ethereum gas fees are driving me nuts. All I want to do is compound my emissions from Convex platform, but I'm completely priced out. Yeah, your MetaMask will get an update probably early, mid next week, maybe later next week, depending on how fast they bump the rollout. And that'll allow you to have EIP 1559 gas pricing, which will be significantly different as compared to what you're experiencing at the moment. You're currently at 67 Gwei for a decent transaction. Yeah, then you're going to be spending double digit dollars, 20, 30, 40, $50 a transaction at these prices, at this Gwei. And, you know, it's frustrating. I could appreciate that. And it prices many people out, as you say. And that's why the other markets were not encouraged, but also that's why they grew into what they are. Polygon fever, which we participated in, was because of its extraordinary price point. It's basically free transactions, and that's why Binance Smart Chain did what it did, and that's why the other L2s, Optimism, Arbitrum, and the other chains, Solana, Phantom, Avalanche, and that's why they're so hot. It's how do we what is the best implementation, and it's not necessarily the cheapest implementation. What's the best? And we're going through this extraordinary growth and realization phase in this industry. Definitely an industry, and where people, not just the participants, but the developers, are figuring out what the heck the best, what the best system is, the best structure and implementation of the system is. FM thoughts on ice hack? Never early, never late. The appropriate thing to do is realize that there's extraordinary opportunities in the crypto space, and being early is has a risk associated with it. Being late means you're probably missing out. So, my mantra is to never be early and never be late. Now, the yield that is produced by countless platforms is extraordinary. And I've been meaning to talk more very rationally about protocols like Hex, which is simply just an incentivized supply disruption protocol where yield is sourced from inflation and debasement. Um, there's nothing complicated about the protocol. If you look at the contracts, it's an extremely, extremely simple implementation. Um, there's nothing special about it, but countless other protocols do that. Curve has a locking component. A lot of protocols have adopted Curve's locking component. And this Stable has a locking component on MTA. They're thinking about getting rid of it. So there's plenty of protocols that have incentivized supply disruption. Half of what makes a protocol go viral is marketing and the actors in the space, and that's okay. Um, what's most meaningful is that be never early. I don't want to take risks with the protocol. I rather wait for it to be tried and tested. We need to entertain the opportunities because Legacy Financials no longer offers opportunities. So this is the place to look, in my opinion, for myself, and it's probably a decent opinion to share with others. Uh, the risks outweigh the rewards outweigh the risks. If you do nothing, that's a risk unto itself. So, point being, um, plenty of protocols have been hacked. Um, these are sophisticated protocols. So when you're assessing where you're contemplating deploying capital to a protocol, it's very important to understand the complexity of it. The increasing the complexity, the increased risk profile. The simpler the protocol, the decreased risk profile. I know you like to talk about Hex FM, and Hex is it's basically a rudimentary smart contract with just a locking component, a time locking component. And um, there's little risk associated with it. Now, the monetary policy and how the market and liquidity, so on and so forth. So there's all the standard considerations when deploying capital to a protocol involved there. Um, and anyway, so I've been meaning to have a stream talking specifically about it compared to about Hex compared to other interest and yield bearing opportunities. It's very comparable. It's for instance, it's not that lucrative. So many folks go around saying it's like this incredible thing. It's not lucrative. It doesn't produce much revenue at all compared to other protocols. And if you increase your risk profile slightly, you could get a huge amount more return on your capital. And sometimes it's not even an increased risk profile to get a significantly greater return on your capital than deploying to Hex. It's not the end all be all of an incredible protocol. It's extremely simplistic. So that's that. I'll talk another stream about that. Breakless Rider, morning Noah, howdy, Iran, hi Noah, how's your ohm doing? I'm not deployed. That's okay. I don't need to be deployed to everything, and I'm not in this to make the most gains possible. I'm not never early and never late, and it's just something I don't need exposure to at the moment. Lisa, is the scaling solution on the horizon, like moving to L2 or something else? I feel like I've been locked out. Well, Polygon's awesome. There's a lot of opportunity on Polygon. I haven't been really digesting what's there because I've been uh, um, concentrating my allocations and taking the less is more approach with regard to time. And I'm very comfortable with my three primary positions. Note that I still have Bancor open, so I still got a Bancor position. Convex is my largest position with CBX CRV, Fracs and M stable. I'm quite interested in what's going on with Cosmos, so the osmosis and the gravity DEX is quite interesting. Been playing around a lot with NFTs lately, so that's the speculative risk bet. So these are just, passive value allocations that generate revenue over time. You're not going to get 1,000x and or 10x or 100x in a couple of days, but with the NFTs, I think I pulled off like a 50x in a matter of like a week and a half, and that's there's an increased risk profile with deploying capital like that. And that's food for thought. So this is only a small percentage at best of capital that I have deployed. I do have I bumped my Ethereum and Bitcoin position, not tremendously. So I had two Bitcoin, but I have some in cold storage. But I moved one over to Ethereum, so I bumped my Ethereum position. I have a good sentiment about what's going on. There's obviously a lot of fun and about Ethereum, and historically there always was from the Bitcoin maximalist community regarding regulation and classifying it as a security because of historic footage and historic conversations. And I just don't see that being the case. No, I see the historic footage, and it's obvious what it means and or the what can be inferred from it and what can be deduced from it. But that's not where the platform is right now, and that's probably not where the platform is heading. Um, it's just a very, very powerful platform. And you guys know because you just look, Lisa says priced out. That sentiment alone means you want to interact with the protocol and you're frustrated because of the cost that's required to interact with it. And that is meaningful. You know, from a from what the platform means, its potential, for its potential role in from a technology perspective heading into the future. It's just an extraordinarily uh, profound platform. What it is, and what it can further become. It's just entrenched. It has all the network effect it needs to continue heading and iterating into the future. Quite fascinating. Um, to understand these platforms, you need to see where they are now and where they're heading. And that's including like security vulnerabilities. Look, uh, X token had a security vulnerability. Those assets, and XTK now is a productive asset. That's awesome. And you go through a security issue, and capital is lost. But look what they did. They've recovered capital. Alpha had an incident, and they used monetary policy to recover capital, and so will ICE and Popsicle. They will use monetary policy to recover capital, make people whole. And why are they going to do that? Because they want to continue working on the protocol. They want to they want to make amends, obviously, but get back on track because it's a powerful protocol. There's only a couple of protocols that are really hitting um, V3 vault positions, and Advisor had that's relatively small security incident, but they all want to keep working, so they're going to do their best to make people whole and keep moving forward. Software is all about iterating. Software is about issues and bugs, and obviously we're dealing with issues and bugs that have an effect on capital loss, and that's meaningful. But I'm also a dev myself, so I understand shit happens. You do your best. There's honor and respect when they do um, extend effort to make people whole and use monetary policy uh, to um, to resolve things the best as possible, and that's cool. Like for instance, they lost 20 mil. They use monetary policy, and people make back their capital over time. That's a good sign, especially if they execute it with care and diligence, and it works out well. So the never early works out, and then I wait, and the protocol stabilizes. They make amends. Now they have a half a bill in liquidity, and next year maybe they have a bill in liquidity, and now the tune is very different because they went through a security incident, and now they learn their lessons. They fix the vulnerabilities. They spend extra care and attention, and they've recovered. So. Um, I personally want to avoid those security incidents, but security incident is not necessarily a sign that a protocol is going to die. Meaningful. Um, Paul, ladies and gentlemen, the crypto space, my man. Zach, Lisa, go check out Badger. Yeah, Badger's cool. So Badger, from Lisa's perspective, where she's priced out of convex, Badger auto compounds your convex or your CVX CRV position, or probably your CVX position also. I haven't seen how Badger's doing lately, but that's cool. Badger's always uh, Badger. I used to classify Badger and a bunch of other DeFi protocols are like second level DeFi where they don't have monetary policy. Well, they're only monetary policy, but they're not. There's no foundation of like transaction fees. Like Curve is obviously monetary policy with their Curve asset, but they're fundamentally a forex market and facilitating exchange. So those are I see as the stronger protocols. But Badger has iterated significantly, and they have quite an offering. My sentiment regarding a lot of protocols, especially meme protocols, has changed a lot over the last year. Um, you know, it's not just all smoke and mirrors. Like you would think somebody comes up, Badger or Popsicle or whatever stupid meme coin, Cream Cream Finance is clearly systemic at this point, infrastructure in many regards. Um, so it's not to be discounted just because it's a meme. And probably that was erroneous on my part, or maybe it was just my early train of thought and how I saw those protocols. But clearly, it's changed. I thought it's important for your ideas and thoughts of things to change. If you're stuck in one way of thinking, you're going to only limit yourself, and that's a great reason why I talk about protocols like Hex. Um, Simple as that. There's no reason to discount anything. You have to entertain them. You have to digest them, really understand them for what they are, and compare them to other protocols. And all we're doing is a risk assessment and an opportunity cost analysis. I hold no allegiance to my current positions. I will liquidate the crap out of them and go to something else if it's a good opportunity. And I guess that's, like I really want to talk about Hex more because it's a very popular asset. And for instance, FM, that's exactly why I don't deploy to Hex. I don't see any opportunity I, other than speculative, and I don't speculate. So if that makes sense, I don't want to buy an asset, let it go up in value just to sell it. That's not what I like to do. So I don't want to, and I don't want to lock something for 4 years because then it's illiquid. I'll lock something for 4 years if I get a constant revenue stream, which is exactly why VECRV is tantalizing. I get literally dollars on a weekly basis. So that's income. So it's a salary. And CVXCRV is not locking. It's a liquid asset, but you're getting constant revenue on a daily. Well, CVXCRV convex is on a second by second basis. You're actually getting revenue that you could actually liquidate. You don't have to wait for years to have access to accrued value. So I don't see it from an opportunity cost perspective that it's interesting. Um, so it's both. So I get my one big thing about in the Hex community, they talk about delay gratification, and that's meaningful. But you get both. If you're getting yield in real time every second of every day, and you can take a salary uh, every week, just like a business, I'm getting instant gratification daily and weekly, but I also have delay gratification because I have principal assets. And the principal assets, I'm holding this position, is extremely volatile, and I speculate that curve is going to have maybe a 10x, 100x increase in volume on the platform, and maybe this is worth 7 mil next year or 70 mil in 2, 3, 4, 5 years. So there's a speculative component here, and that's delay gratification unto itself. It doesn't mean I need to make assets illiquid for an extended period of time. For instance, Fracs, uh, VEFXS, I have a 4-year lock. So here you go. So Hex talks about locks, and VEFXX, FSX is a 4-year lock on my assets. But I'm getting yield in real time every day. And so it's a salary. Or I could restake it, but it's in my control. And that's what I like about it. Optionality, choices, and freedom. Ladies and gentlemen, I can do what I want with this. If I need to pay a bill, whoop, there you go. $2,390,000. And I could pay a bill. So I need that income, and that's meaningful. And a lot of assets you can't do that with. So just be careful and really understand what you're doing and the implications of what you're doing. And delay gratification only goes so far, guys. Anarcho, hit that like button. 37 people in the stream, 8 likes. We can do better. Lisa, you're very welcome. Paul, thoughts on the crypto legislation? Yeah, so they want to tax the crypto space. Why the heck don't they tax Diablo? Why the heck don't they tax World of Warcraft? What is this is a money grab. You can imagine World of Warcraft and Diablo, they've had markets for how many years? So many years, so many millions of dollars they could have taxed if they just said, hey, Blizzard, you got to submit 1099s and tell us the capital gains. People are buying and selling stuff. They're making money all over the place, but they never reported 1099s. Now, I would love 1099s from a variety of fiat on and off ramps, and that makes sense. Now, I think they're going overboard, and a lot of the crypto tax companies, and I don't think that that is really honorable or reasonable. It's not about unrealized capital gains getting recirculated and keeping capital in the crypto space is like a retirement account, so it's untaxed until 69 and a half years old, and has tax treatment like a retirement account. This is gaming. It's the same. It's completely analogous to what's going on with World of Warcraft and Diablo. Will be doing the crypto space. So the capital in there's nothing to do with dollars. It's a gaming environment, and by them trying to tax it, it really gives legitimacy to it as really a financial network. So that's interesting unto itself. Maybe that's a positive repercussion of any legislation whatsoever. It's bringing significant legitimacy to it. But personally, I think the simplest implementation for tax code is centralized exchanges give a 1099. If you put capital into it from a crypto source, you tax it with zero cost basis. It's realized gains. They should just keep it simple. If somebody wants to spend money and it's untaxed money, you pay taxes on it. Otherwise, it's just ridiculous trying to manage the DeFi space like a brokerage account. It's not a brokerage account. It's not securities. This is new. It's different, and they're going to try and jam all this new shit into uh, legacy financial and taxation framework. This is the most ridiculous thing. They're so old and they don't know how to spark innovation. All they're going to do is just annoy and frustrate the crap out of people and push development overseas and push financial or actors in the space to not want to comply. They should want to make it simple so people give them money. I want to pay taxes. I want it to be simple. They're just so annoying. Why don't they just make it simple? I pay them. I pay them what they want, and but I'm frustrated doing it, and that's not really what taxation should be. Taxation should be an honorable thing, and they make it a painful thing, and that's not the right way for the country to head. People should be allowed to explore their financial opportunities, realize their capital gains, and pay real bills and pay taxes on your realized capital gains. It just makes sense. But they just got to take it one step further and try and get every penny they can because they have their old rule book and they want to jam new shit into their old rule book. New, innovative, iterate, do things different. You don't have to do them the same way you used to do them. That's what's beautiful and exciting and tantalizing about the crypto space. It's iterating so fast. It's actually, governance votes and the protocol changes and the responses to security incidents, and things move on. Things move forward. Stagnation, resistance to change. That's so damn frustrating, boys and girls. So frustrating. Um, you need more crypto checking in. Morning, y'all. Yeah. Paul, amen. Will blockchains adopt some type of KYC on? It's not possible. It's not technologically possible. And this is what's so questionable. And there's the risk and uncertainty about how things proceed. It's not possible for blockchains to have KYC. It's not possible for nodes and proof of stake and proof of work miners to issue 1099s. It's not technologically possible. And DeFi, the reason it's not possible is because, sure, you have probably a lot of DeFi that wants to comply, but you have other DeFi that has no need to comply. And even Uniswap, they're interested in compliance, and that's probably from a large corporate actor perspective. But Uniswap is immutable smart contracts, which you can't, no regulatory authority can do anything about. They can't be modified. And IPFS hosted portals. You can't do anything about it. There's no actor to target, to force, to make a change, or to arrest, or to attempt to regulate. It's that's the whole point, and that's very meaningful. So if anyone in Congress remotely understood what's going on, they remotely understood what's going on, they would simply say, realize capital gains that go to a, a fiat on and off ramp, a centralized exchange, Coinbase and Gemini. You pay taxes on it. Instead, they're making ridiculous, we're expressing a ridiculous interest in trying to get all this data and all this information about everyone's behavior. They could literally be done in 5 seconds and get a significant boost to their revenue. 5 seconds. Coinbase 1099. If someone's, and you do a little bit of on-chain analysis to say, the odds are this is unrealized capital gains that is coming into Coinbase, or unrealized capital gains is coming into Gemini, and there's your 1099. This is how much you owe. Instead, no, they want to know everyone's identity. They want to know what everyone's doing. There's literally no new ideas and no new thoughts. I find, Tom Emmer and Senator Loomis, but I still think they don't. Something I've learned as a developer is keep it simple. If it's complicated, stop and make it simple, because then it's maintainable, it's iterable, it's understandable, and that's not what they're doing. They shoot themselves in the foot at the government level over and over again. They just need to make it simple. They have one interest. They want increased revenue. Okay, if you make it simple, then people are going to appreciate that they made it simple. They're going to comply with rules and regulations, and they're going to get increased revenue. If you make it complicated, the general public fights you on it. And you're going to have DeFi protocols, and they'll go offshore, and then you can't regulate shit. If you overtax, people are just going to leave. They're going to go offshore. Why? Because that's an opportunity cost analysis. If you're going to overtax in the U.S., all right, I'm going to Canada. Bye. So they don't get it. They really don't. Sup, Posh? Hey, Noah, have you heard of Tranches? No, I have not. It's a derivative protocol for BTC that lets you earn a good yield on idle BTC. Yeah, it's probably selling calls, or you're selling options. That's cool. Um, you know, it's important for that ecosystem to evolve. Clearly, it's not as sophisticated as what we do in the Ethereum or the smart contract DeFi space. They'll say it's a Bitcoin smart contracts, but Bitcoin it's a stack. It has an order of operations to the execution of any programmed code. It's very different than Ethereum smart contracts, where you could actually code logic and programmatic structure and Turing complete functionality. You can't do anything like that on Bitcoin. So you can do a lot of stuff. Um, Obviously, they are doing things, but it's not comparable what can be done. It's good to see. Um, Bear in mind, there's a risk associated with that. It's not. I'd rather just rehypothecate it to over collateralized debtors. So I think that is better than selling options, in my opinion. So tranches, you get a yield from selling those options. But if any of that gets hit, um, you're gonna lose your assets. Whereas with an over collateralized debt position, if so, you if you take no debt yourself on your collateral, you're getting interest from people paying debt, borrowing your assets. But if they ever have an issue repaying their debt, their collateral is liquidated. So I find the money markets, and I find Aave much more interesting from a base yield perspective. You don't get anything on your Bitcoin, but you can borrow dollars and you can capitalize on that. So equity access and so on and so forth is much more robust. Um, so Aave just makes much more sense to me from a financial opportunity as compared to the the meaningful yet very rudimentary DeFi options directly on the Bitcoin protocol. They don't interest me that much. I find them to have a huge amount of opportunity cost, if that uh, makes sense, and it's definitely consistent with the message I convey. I think from another stream earlier, you mentioned you sold some of your CRV. I trimmed my CRV position a little bit. CVX CRV, not CRV. My CRV is locked as VE CRV. I bought that stuff back last year uh, when Curve launched CRV. There was a time when Curve didn't have CRV, and I was one of the first liquidity providers for REN BTC. And those were interesting times. I mean, Curve literally had like $1 million in daily transaction volume at the beginning of last year when they first launched. So it was very they were so excited when it was like $10 million a day. It was like, whoa, this Curve's going crazy, and now it's $250 million a day. Um, I missed what you said, Sapash. With big crypto VC backing like Binance Labs, yeah, that's cool. That doesn't mean it's the best opportunity. So, do your opportunity cost analysis accordingly. And if maybe you just don't want exposure to the Ethereum space, and that's understandable, and that's how that weighs in your calculations. Maybe you just want raw Bitcoin exposure, and that's interesting. I just it's important to get yield. The world operates on yield. And if your asset, albeit that's the whole argument for Bitcoin, that you don't need any yield. It unto itself is going to appreciate as the rest of the legacy fiat system implodes on itself. So, I guess Bitcoin maximalists would argue, why am I going to take any risk whatsoever with my Bitcoin and levy options on it when it's only a couple of percent and you're taking a risk with the hardest money in the world. So I would say Bitcoin maximalists probably would never interact with anything that places a risk profile on their Bitcoin position. Interesting. Um, so I don't have any CVX currently, Austin. I have accrued yield from Convex. I trimmed my CVX CRV position, but still very large. It's my largest position in all regards, but I wanted exposure to Fracs and a little bit of M stable. I'm getting a little disenchanted with M stable. I mean, what's lovely is that the principal asset is GUSD paired with MUSD, so it's an extraordinarily risk minimized stablecoin yield opportunity. Yeah, let's go over here. We'll see what we're getting. Getting 25% on 30 grand, which is cool. I mean, that beats the crap out of banking. um, so maybe I'm not. As long as the numbers stay decent, but otherwise, Frax really piques my interest because FXS is a deflationary asset. And read more about it, as I always say, in the documentation down here on the left. And the yield using Frax paired with USDC is quite a comfortable position in my mind. I don't have much. I don't have a negative sentiment about Circle and USD coin. So Frax paired with it, I'm able to sleep well at night, and obviously it produces yield. It's not that much, but actually that's a fair amount. I think that's about a little over a week, a little over a week, $1,000 a week. I'm not going to complain about. It's 4 grand a month. Some extra minimum wage job. Well, that's more. Oh, I certainly shouldn't be complaining. That's a fair paycheck. Fair paycheck. Joe, let's take a peek at the charts real quick. Wrap up the stream in a couple minutes. Oh wow, 42. If this breaks this high, if there's a breakout above 42.6, if it doesn't hit resistance right here, we're going back to 50. We'll go back to the next fib. I mean, there's just not much resistance there because this was some serious illiquidity driving down the price action in this leg right here. So if this breaks out here, that's going to be probably a decent quick rip. Maybe a day or two, but it could just heck, we could have a giant green candle. Look at this beautiful green candle back here in February. That's a relatively large green candle. And that'll take us right back to 50. Boom. And we'll get back to this price region up here where it held for 3 days. 2 days. Look at those candles. So it held very horizontal for 2 days and then bam, it dumped. So we'll get back to that price region real quick, in my opinion. Look at that. That's a beauty. Let's see what Ethereum's doing. Oh, wow. 28. I mean, come on. You get above, you see where this is going. If you get above three, if you hit 3 grand, blah, 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 that's going to go up real quick. So that's nice, and that's the way I express my view. I'm more interested in Ethereum. I know a lot of people have their concerns, especially Bitcoin maximalists. I personally think it's the most fascinating financial system I've ever seen, and that's obviously expressed with my skew of value allocation. Let's take a look at the SPX for a second. Oh, this explains it. Yeah, but you know what? Here's the contradiction. Market indicators are all over the place. And the 10-year, I think, is completely controlled by the Fed. Wow, look at that big candle. You don't see that often. I think Forex, I think the dollar really has been distorted to such an extreme it reduces to just a relationship to sovereign printing press velocity. And markets are completely detached. We used to see correlation, and now we just see whatever. Look, dollar's ripping and crypto's ripping. Come on. Dollar ripping used to mean that risk assets were at risk, where risk assets are at the risk of depreciating. And that's clearly not the case because the dollar just ripped one heck of a candle on the daily, and S&P looks green as green, and Ethereum and Bitcoin are ripping. Oh, wow. Look at it trying to punch through. Very interesting. Let me hit a couple of questions and we'll wrap it up. Matthew, you should be able to get 40%-ish on USDC if you leverage your position Abracadabra. Yeah, so I like Abracadabra. But what do I need exposure to that protocol? Never early, never late. I played around with the protocol, don't get me wrong, and I think S-Spell is, particularly S-Spell, is quite interesting. But do I need exposure to it? I get tempted, but I don't want, I don't want to deploy that capital when I could take less risk, significantly less risk, MUSD and GUSD, significantly less risk, and get 25%. So there's your risk assessment, and I'm missing out. Abracadabra has been proving itself, but that's the point. Never early, never late. Let the protocol play out. I'll take a peek in 2, 3, 4, 5, 6 months. And if everything's sound and stable and the peg and the protocol is working nice, great. I don't need to rush into a protocol just to get an extra 15% yield. What's up, Posh? I always had a hard time explaining to friends, family, how does DeFi give you much higher yield than CeFi? What's your advice on how to explain? It's very difficult. It's very difficult because to understand the vast majority of yield, which is incentivized yield, you have to understand monetary policy, which is a conversation that's typical for sovereign nations and the Federal Reserve. Literally talking about concepts such as inflation, deflation, and velocity, and currency flow, and so on and so forth. So that's very hard to explain the incentivized emissions as not just, smoke and mirrors. But base APY. So the first thing you should do, and this should unto itself blow people's minds, if you go over here, you get 9.65% on your money from transaction fees. So you're providing capital, or you own. You're not providing capital. We're not liquidity providers here with a CVX CRV position. But what you're owning is rights to transaction fees generated by the Curve platform. And just tell them if you provide dollars and pounds and you take 0.02% of every transaction when someone swaps their currency, that's exactly what 3Curve is, 9.65%. It's revenue generated from transaction fees. So 9.65% is definitely understandable from a CFI perspective. There's the source of revenue. To understand curve and CVX, that takes a bit more. So now you have to talk monetary policy and emissions and disinflation or emission schedules and incentivized supply disruption and debasement and how to prevent debasement. So obviously CVX and CRV have incentivized supply disruption, which prevents debasement because that's a reduction or a, a, that reduces circulating supply. Whereas obviously the inflation is increasing circulating supply, but the inflation is decreasing over time. So these are disinflationary protocols. So that's a complicated conversation to try and convey where the hell the yield comes from. But if you tell them 9.65% comes from transaction fees, they're like, oh, cool. So as long as the transaction volume stays the same or goes up, that's where your transaction fees are coming from. That's pretty simple. They think it's just magic internet fake money. No, it's transaction fees. At least my favorite yield source is transaction fees. A lot others like look, I'm stable. You get in. Sometimes it spikes depending on demand. It was like 25% a couple of days ago, but um, this is their emissions from their fiat currency from what they created. So that's I called it a fiat currency. So all of these have characteristics of fiat currencies. Every asset you interact with. Um, it's a true statement. If it has the properties of a fiat currency, inflation, deflation, debasement, it is a fiat currency. If well, it's just not issued by a sovereign, which is historically whom issues fiat currencies. Otherwise, if it walks like a bank and talks like a bank, it's a damn bank. And that's what Aave is. If it walks like a forex market and talks like a forex market, it's a forex market. And that's what Curve is. If it if it walks and talks like a brokerage, it is one. That's what Uniswap is. It's a permissionless, decentralized, immutable brokerage where you provide the liquidity rather than banks and large asset holders. Okay, sold on the run up, bought the bottom, Joe. It's all good. Play the game, be it safe, take less risk. You need more crypto? Send it. Johnny T, won't DeFi platforms like Curve be a target for the proposals? Yeah, but it's not enforceable. The team itself doesn't operate in the US. Curve is extensively decentralized, DAO voting left and right. The contracts on chain are not targetable. And Curve has an IPFS hosted portal solution, just like Uniswap. Um, so there's nothing targetable. They're trying to push through legislation, and there's literally no technological way to either request, encourage, or force compliance. So we're entering just this period of unknown. Like they want the market to behave a certain way, and they're not going to get it. So why even do it in the first place? They're so off base with their understanding of these systems. They're so off base how to fold these systems into status quo infrastructure. They're so off base for how to extract returns via taxation from these systems. They're just so off base. It's extraordinary. They don't get it. Anyway, let's wrap it up. 33 people in the stream, 17 likes. We can do better. Friday, August 6th, 12:10 p.m. As always, tell everyone to subscribe. Stop by Discord for the after party, and I will see everyone on Monday. Y'all have a good one now. Peace.